The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Another day out here. We've got a little bit of action, not a whole lot. Just when you think the market's going to go up, it goes down. Just when you think it's going to go down, it goes up. We're up 11 points on the S&P cash. Just turned 2 billion shares. And I think we're in a market that is making something called a polytrend top. We will look at that when we get back. But we'd be close to breaking that today if we don't turn back down. But we'll look at it. Not a whole lot of movement out here. 10 points up, 10 points down. Market's trying to find a direction, but not a lot of volume so far in the day. If we would have had something like 2.3 billion shares, I would have thought that maybe we had a much better chance of breaking out. Just kind of a Pavlov's dog of ring the bell. Any kind of lower price needs to be bought, but not a lot of energy to go much higher. So I continue to think we're in one of those 50-50 propositions where each day the market can go up 10 S&P points, 15 S&P points, or wake up and find out that it closes down or opens down 40 or 50 points. And that's kind of the way we have this market set up. It may be a little bit more tilted to opening up 10 points higher or 5 points higher. I just don't see a lot, but we'll get into that poly trend top today. I've talked about it before, but it really we're kind of at the edges of it here if we close up today. But it'll give you an idea how these things form. I've kind of compared them to a contact lens before, but that's it. Of course, we got a lot of juice and kind of a push in a few of these. They were lower this morning. And, of course, the NASDAQ is what everybody's looking up 20 points on the NASDAQ with just over 1 billion shares. So the question is whether they're going to be able to hold this up through the end of May. I don't suspect that we're going to have a big move in the indexes. Could they? Right now, it looks to me like a whole lot of distribution going on. And the question is, can they hold this thing up and get it in to fund buying at the end of the month and then hold it up till the 5th or so of May? I'm not real concerned that the market's going higher, more concerned about the market going sideways and with the possibility of it going down. So we'll keep an eye on that today. And some other stuff. Got a lot of earnings to go through today. And before I start digressing, it's always time for a little history to get started.
Then it's all just a little bit of history repeating.
And it is a wonderful day. In 1970, the Dow Jones Industrial average dropped 1.3%, 762.51. Mr. Ross Perot himself.
There will be a giant sucking sound.
Suffers the worst one-day personal investment loss on his record, and on anybody's record. His electronic data system company drops from roughly $150 a share to $80 in chaotic over-the-counter trading, a paper loss of $450 million for Mr. Perot. And, of course, we'll always remember him here.
There will be a giant sucking sound.
Quite the individual. Well, let's put it that way. But what else can you say? Polytrend top is what I wanted to get into. We've kind of been looking at this as the, or at least I have been, as the architect, if this is a top in the markets. I don't see a lot of juice to go higher. I know a lot of people can make a lot of statements about there's not a lot of juice to go lower. and I'm not beyond that. I just don't see any impotence in the coming months where things are going to get any better. We look at the dollar index, it's off 2 cents, but it certainly was down lower, is down as much as 55 cents today. I think we've got a lot of action in the Fed and the treasuries and the central bankers all trying to keep the dollar from running away out here. As my friend Andy Heck says, you can slow it down, but you can't stop it. It's a locomotive. It's a freight train. It's going to go where it wants to go. And as long as the tracks are out there, you can kind of put down a few crossing guards and make people stop a few times, but it's going to get there. It's got the mo, and it thinks it can. It thinks it can. It certainly looks to me like that's at least one issue. Anyway, there was a guy named Bob Carver, and I used to visit his website. You can now, but he's kind of gone full aluminum foil helmet on us, or at least he has been. So I haven't been paying attention to him probably since the last 5 years. Seems to maybe I'll do the same thing. But he seems to be getting a little older and kind of a little nuttier. Nice guy, but kind of going off the deep end. Anyway, he's got got a thing called the poly trend top, and that's where you just kind of bang away going up, and then you start banging away with the lower highs on the right hand shoulder of it. If you draw a circle or a contact lens above it, probably the best description of making a poly trend top. And I think that pretty much, I think we get about 21.10, 21.11 on the right shoulder. As long as it stays underneath there, we're probably okay. If it goes a little higher, then we're probably going to break that. So we're pretty close, within a point or so of going higher out here. But kind of hard to get really excited out here on this market. In what mostly looks like a lot of flopping around like a fish on the dock. But I do digress. Anyway, polytrend tops, they're never perfect or never exactly as you imagine them. In fact, all these patterns are rough approximations, and normally what we show is the most beautiful version of that pattern. Those patterns rarely come out that way. Occasionally you get these wonderful looking textbook patterns, and we'll talk about gold stocks also. But, there's an old saying, and I forget the guy who said it, the map is not the territory. The map is just a representation of what we look at. It's not reality. It's not the land. He's pretty famous for saying that, because we basically have to think about a lot of things, because they're not, a chart is just a representation. Sometimes, depending on the scaling, you may or may not get the true meaning of the actual price movement. The same thing with just about anything we deal with. There's a little bit of room for interpretation. And of course, if you go too far and too deep into chart reading, the belief that it is a Rorschach test for what you believe. Probably better than just wildly guessing, but at the same time, you don't want to get too far down. As Jesse Livermore said, every sunken ship had a chart. So you want to watch that. For the most part, they work about 75% of the time. You want to be very tough, though, when it goes against you, and that's why you put in stops. You got to just eventually say, for whatever reason, this is not working now. Greece is the word. It's got a meaning. Greek banks shares slide to a record low this morning as ECB considers pulling the plug. The European Central Bank draws up plans to limit emergency assistance as the new chief guy in Greece gears up to meet with Chancellor Merkel. And what can you say out there? I just don't see regardless what other people say, I've read enough about the new leader there, Alexis, and his bunch of his fellow travelers, and they are not just sort of socialist or sort of communist. They are the college kind that are the true believers, and whether they say that party is a communist or socialist, I've read what they've said, at least the translations, and they meet my definition of a communist or a socialist. And as Margaret Thatcher once said, socialism works good until you run out of other people's money. And the Greeks are out of other people's money. And the question is, can or will they wake up to reality? Or do they have to, like an alcoholic, hit bottom before they figure it all out? So we'll continue looking at that. What else do we have out here? So, heresy. It's amazing just how well the market manipulators in Tesla are moving that stock, TSLA. There was some rather bad news in Tesla that came out over the night. And as soon as they do, there are 20 upgrades to the stock coming out in the morning. Now, it did test the lows with lighter volume. Not enough to make me think this isn't still in some kind of bigger trading range from probably that 225 back down to this 180, 185 level lower. Not a lot of extensive juice in there. It's not all that bad on the way up. But I continue to think that what we're going to have is a huge surprise one day in the earnings, and earnings are coming up. But it's amazing that it's either Elon Musk with the Twitter or it's 20 analysts moving this thing up. But my guess is this is all about distribution, and we're going to see this thing go sideways for a while until they're done distributing it. But what a cash cow. A lot of people in this thing at 35 and 30 bucks, and they're going to be pushing the paper out on this one for some time to come. The bad news, and the reason that they all came out with the wildly optimistic and incredibly self-serving upgrades on this, is it would take, at its present valuation, the growth it has today for 10 years to grow in to $220 a share. So we know it's astronomically charged. Now, what the reality is a lot different. And that is that Edmunds, the car information company, has come out and found out what and if people are buying new Teslas to replace their old Teslas and or EV cars. And what we found out is that people are trading in their Teslas to buy big SUVs. Looks to be like maybe we've seen the peak of the statement buyer for buying EVs. We'll be back in a minute to talk more about this. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, Tesla always an interesting stock to watch what it does, and they popped it fairly hard. It's got a high short interest rate in it, and of course, anytime that short interest starts to balloon, they come up with a lot of reasons to run it. Of course, this is coming in front of earnings, and you got to kind of look at this thing and think, if there's a bubble, it's certainly in this stock. It's a $40 stock trading at 200 and some odd bucks, 220 bucks. Even if you decided that this thing was going to grow at the level that it is growing, any kind of even vast forward-looking idea on this would say that maybe 80 bucks would be ridiculously high, 220, just nutso, for a company that's most likely going to see declining margins in the near future. Their books are also going to be looking rather harsh as they build more capability and, of course, build the EV factory out there in the desert, and using some of the most expensive ways of actually building a manufacturing plant. The risk, if there is one to the company, of course, is whether or not someone comes out with a better battery technology than they do, and or a replacement for it. Just what would Tesla be with after they've blown $6 billion building a battery factory. And again, a lot of people saying, well, the batteries are going to get a lot better. It is at least 100 years of battery technology says that chemistry moves incredibly slowly. It's not like building a chip that seems to get smaller and faster every single year. But I do digress. And that's, I think, all the news out here. We wanted to get to stocks a little quicker today. We were looking at Tesla out here. It's going up against the February 5th high, 225.48. But as far as I can tell, no real meat in all these upgrades other than the fact that a lot of people were short this thing and they wanted to run them. I've seen great deal of stocks with high short interest getting goosed over the last couple of weeks. But what else can you say about that? I talked about the Greeks. Chinese still look like they're in a bubble. It's hard to tell what's going to happen with that, although I can't imagine waking up any day and seeing the Chinese stock market down 10%, because that's basically the patterns that they have. And the way that those markets work is that you do see off the top some kind of open that's 10% lower when you get chart patterns like they've had out there, especially since nothing is substantially changed other than they're pushing some more cash out. But they've made it much more difficult to push that cash into the stock market, but doesn't seem to matter, at least the last couple of days. Wanted to take a look at a few other stocks. Well, let's get into earnings, then I'll get into the Gartley patterns in the gold miners when we get back. Maybe before the end of the day out here. But it looks to me like maybe we are setting those up. Now, for some of those folks that were thinking that we're getting close to a top in the biotechs, one of the first clear, unambiguous signals of a high in a biotech in a long while. Amgen is out here today. It's going up against a 9 million share high. That was March 20th at 172.36. It went a buck higher than that, a buck 30 higher than that. It has moved and closed back down. The energy from that March 20th high to the April 6th low was statistically significantly more than the move back up here. We've got some decent volume. I'm not saying that this is predicting the end of the world out here, but it certainly is showing at least some level of a possible breakout here. What you would want to do is probably, if you wanted Amgen as a signal for the IBB and the rest of them, is you probably wanted to see a close back below some kind of confirming signal, and that would be probably the 3x3 displaced moving average. So in the next 3 days, you basically want this thing closing above 167, 168. If you don't have that, you can use the 9-day moving average. And a traditional moving average, it's a little lower, about 165. But keep an eye on those. We are starting to get our signal. When we come back, we'll look at Illumina too, another one not doing so well. Give me a call, 877-927-6648, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to get into the movers out here. We talked about Amgen. One of the stocks that I said probably wouldn't be shorting is the Boeing company. A little bit down today. I still can't make a great case for shorting this. There's so many other better ones out there. I think the market's going down. Boeing will probably go down with it. If I am right on the general market, I just think it's going to go down a lot less than a lot of other companies. They've got a lot of orders, and it doesn't look like that's going to change anytime soon. But a close today is a little bearish out here. 145 is the last previous low. That is on March 26th, and what I'm looking at out here. We'll zoom in a little bit. Little bit of dollar talk, but that's pretty much it. Broadcom seems to be another company doing all the right things. Should have been able to blow through this high, though, and has not. The last high on this was March 20th at $46.31. Needed 8.6 million shares. Got double that, but it's pulled back into this higher range. And again, a lot of these stocks that act like they're going to break out run a lot of shorts, but at the same time find a lot of sellers at previous highs. CMG is another one of these companies that's taking it in the shorts today, down on fairly significant volume, at least in the shorter term. Longer term looks like it's going to work its way back to the 607.55, and I think that was the move on the last time this thing went down. The usual suspects are out on CNBC and on other channels of financial pornography, pushing the story that they're going to get into the pizza business and basically rip the pizza business a new one. It hasn't done a whole lot of good for this stock today. They talked about getting a new pork supplier in some areas, but I don't know. A lot of these stocks just have very long and huge and big distribution areas, and it's hard to see that this isn't another one of these stocks going sideways. Valuations are incredibly high. For it to stumble even a little bit, or at least in the last, I guess the last 2 quarters, each time it's had a decidedly downside move to it. These trendy yuppie restaurants, boy, they certainly have a tendency to disappoint after a while. I've driven by a bunch of them. The lines have always been long, so I don't go into them. But it's hard for me to pay a lot of money for Mexican food. But certainly enough volume out here to break all the previous lows. And my guess is we got to get a test of 607.55 in before we go much further. Alumina, another one of these stocks, a little bit of a reversal pattern out here. Again, the IBB not doing all that bad. If I remember from early, I've got a quick quote. Up 87 cents. Could be a lot worse, but it is not. This thing has made a fairly decidedly bearish pattern out here with volume today. The previous low is 178.52 from March 26th, and my guess is that, what's that, down another $12 or so. Could easily work its way in the next 30 days back lower, unless everybody just decides that they have to ignore anything these companies say about the future. But pretty much down on exactly what they're saying, which is lower. We are up 11 points on the S&P cash, 2.2 billion shares. What else do we have going on out here? Intuitive Surgical, another little gift out here. This thing had been acting rather weak and had gone above its previous highs. You basically tried to break the highs. It closed back underneath it on the 13th of this month. It popped up yesterday. It popped up 3 days ago on some decent volume. And I don't know what else you can say about it. Popped up, ran the shorts. But again, I'm seeing a lot of these kind of patterns, which is running shorts and then pretty decent reversals when the earnings actually come out. MasterCard and Visa, of course, are having a nice day. That is because the Chinese have said that MasterCard and Visa would be able to be used over in China.
I like Chinese. I like Chinese. I like their tiny little trees. Their zen, their ping pong, they hit.
I like Chinese, and MasterCard and Visa do too today. Certainly the nice pops in these stocks are all about that. Looks like plenty of volume to go out there and test. $93 coming up on MasterCard and Visa. On Visa, we actually did test that, and it pulled back in. So it certainly looks like the weaker of these two out here. But so many of these stocks actually did get up to these and do a little prairie dogging to stick their head out. And they see some kind of animal that would eat them, and they run right back into the hole. And that's what we had. But we had twice the volume we had on March 3rd at 69.66. We went above it. We've closed below it with twice the volume. So maybe we get back up there again. But a lot of people more than willing to take the quick cash and exit stage right as quickly as they're having. VMware, also a lot of people talking about it. Earnings were not that good, but they're talking forward doing rather well. Someone brought that up in the den. A nice little clip up here. It is holding its previous high That goes at 89 bucks from the November 28th low at 560,000 shares. I've always liked this company just because I know who runs it. I'm not real big on a lot of CEOs, but both of these guys are sharper than tacks. They got thrown out of PeopleSoft when Oracle went and bought them and ran them out of the company. But both were really, really good managers. And this is kind of a pay and infrastructure and human resources company that takes care of all that online in the cloud. And, I think it can, well, excuse me, not VMware is, but I was thinking about Workday. VMware, of course, is well, I went off on a tangent there, didn't I? Thinking about Workday. VMware, of course, has been working a great deal. I've talked about it for over a year with their virtualized routers so that it doesn't matter which and where the cables are plugged in. They can route things just about any way they want and do it all in software. So it's not nearly as hardware bound as the other ones. But 4.7 million shares up against that 89 share high is everything that you wanted. That opens up the 103.86 from August 19th, but certainly a sign of strength. And this had a lot of action down below the October 22nd low and a huge washout and a pretty good pattern out here. So, yes, VMware's having a good day. I haven't looked at Workday in a long time, which is the one for some reason I was thinking of. Kind of going sideways. Not a whole lot out there in that one. We talked about Tesla. That's about it. I wanted to get back in to some of these gold stocks because we talked about the Gartley patterns in them. I started to go short yesterday in these, and then, of course, the Gulf started to light up. I didn't want to have the risk overnight. In retrospect, probably well worth it. But what do we have out here for Gartley patterns? Where's my Gartley pattern stocks? 16th, ADC, DDE. Well, first one was GDX. So let's take a quick look at this one in the Gartley patterns. This one didn't even, pretty symmetrical, which I like in Gartley patterns. Basically, the A to a D point had 70% retracement, and the B to C had a almost 70% retracement from the A to B point. So a pretty symmetrical pattern out here. It did have slightly better volume when it broke the B point, which was the only thing on this one, but coming back down. Gold, another one out here that had a good Gartley pattern. Looks like we're getting confirmation on those today. Not a lot of volume yet, but I'm not surprised. But could it be rather problematic out here? And what else did we have out here? Xilinx, a few of those. GDX, we did that one, right? And gold, okay. I thought there was a couple more that I did. What's this one? The 16th? Let's go to the 15th. Yeah. We talked about houses, too. And these have some fairly and probably even better Gartley patterns than in the gold miner stocks. But we certainly have a nice move in these. Looks like we're going to continue on down in these housing stocks. But if you want to look at these, if you've got Tom's book on Gartley patterns, I, of course, wrote the software to go back and look at these. And even though I don't use them as much as other people, I may have looked at more Gartley patterns writing the software than I think any human ever has, because there's never been a mathematical way or a programmable way of going back and looking at these things. But certainly looked fairly good out here. You had a doji that set up the D point. We're going to continue to pull back. And, of course, like on Beezer, that opens up the C point, which is $15.65. That the news was pretty good in the housing sector, and this could not hold up is fairly interesting. Same thing with KBH. Steve Rhodes just keeps coming and going out here. I've got to figure out a way to turn off his notifications. He's going in and out and in and out. What else do we have? Anyway, KBH, not a lot of volume again in these, but some fairly different, decent retracements possible out here. C point on KB Homes is $13.21. So don't know what else you can say about that. GLD, let's take a quick look as I bounce back and forth to these. And I've talked about this, you could make a case for an ABC pattern in the gold stocks or in GLD. I don't know if you can take the projection on it. I think we have at least a good chance of testing the 109.77 in the GLD. That's the March 17th low out here. You did have a nice test of the low, but you did not break it. And that's, you basically came within what? You came within a dime of it. But again, sometimes those dimes actually matter. And if this would have gone just a dime lower, tested the November 5th low, I would have been all over it and said, hey, it's time to buy it. What I disliked was the energy off that low to the 117.47 high was not all that exciting, at least in the ETF. Let's see what else we have out here. There were a few other ones that I thought were interesting in these Gartley patterns that I wanted to look at. KST. Paper and packaging. We talked about that yesterday, how important these paper and packaging companies are. The canaries in the coal mine. Capstone Paper and Packaging Company, symbol is KS on this one, maybe down here and maybe at least temporarily at the low end. You had a lot of volume yesterday. It looks like maybe that was an exhaustion move in this bigger Gartley pattern. And we're going a little bit sideways here today. So keep an eye on that. Again, you can email me at path@tfnn.com or you can call me at 877-927-6648 in the meantime. What else did I wanted to get to today? I got a minute left here. Royal Gold, one of the bullish Gartley patterns out here, also has one. Not a lot of volume in this one either. Of course, Royal Gold is a royalty gold company, and they trade a little bit different than, of course, the miners out there themselves. There was some other company out here that I thought was incredibly interesting. I think it was one that was making lows. Let's go out here and look at it. I think it was Platinum something or rather. PLG. PLG was interesting to me because if you wanted to do some pairs trading, being short gold and maybe long platinum might be a better trade. This looked like a penny stock out here that was at least interesting. It had come back and tested its previous low, or getting close to its previous low on 42 cents. So it is a penny stock out here, but maybe that may be an interesting play for somebody. We'll be back in just a minute.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to go to the phones. Nick in Titusville, Florida.
Yes, sir.
Hey, how you doing?
Good. Yourself?
Another day in paradise.
That's for sure.
So what do you want to look at today?
TSEM.
Tower Semiconductor. So what are you thinking about doing on this one?
Well, it's made a nice run all the way from November, from about $9 up to 18 or so.
Yeah, this thing's like a lot of stocks out here in the market. It's in an asymmetrical triangle. Normally, the way you play these, have you heard me discuss these before?
Yep.
Okay. Lower highs, lower lows, or I mean higher lows, lower highs, much like the Apple pattern out here. And normally you just fade whichever side this thing breaks out on. So if you were bullish, you would like this thing to break down and most likely come after this gap that is about 1475. If this thing gapped down there, the volume all disappeared at about 1475, would probably be a pretty good buy. If this thing breaks out to the top, you probably got 2 or 3 days of upside, and then the thing comes back down. So just look for a lot of head fakes probably out of something like this. But what you would love to see is it actually pull back down and break out to the downside, and if at all possible, hit that gap with huge volume from, when is that? The 23rd of February.
Yep.
So I don't know. What are you thinking? You know any more about this company, maybe the fundamentals or something?
No, I was thinking that with the problems going overseas, this is an Israel company.
Yeah.
And how that would affect it.
Well, somebody, in fact, they got mad at me because somebody wanted to invest in a Canadian company, tech company. And I said, well, he says the valuation's so cheap. And I said, well, you know that Canadian tech companies sell for 25% of what American companies sell for because it's called the Connect discount, because as soon as anybody gets good, they go down and make 4 times as much in Silicon Valley. So they all leave. And I said, it's very tough to keep a company like that going. It seems like everybody's being bought out in Israel. In fact, a lot of these companies sense that maybe there's going to be a lot of war in that area. And these companies that are good are doing a lot to make sure they get bought out and have the ability to move everybody very quickly and get all their technology out of that area. So, I mean, I wouldn't short this thing, but I do think that, the only risk that you have for higher prices is some kind of buyout from somewhere that we don't know about or don't know anything about. But the only safe place to buy it would be back down to this gap. But a lot of these companies trade for a severe discount because they are in Israel. And, I think, when they can't get bought out, they end up looking a lot more like Soda, which was the Israeli company. This thing's actually not doing too bad down here. Maybe it'll consolidate out and start moving back up. But it's another company that has a problem being there in kind of a war-torn country, and nothing getting better. That always, every day, the news looks worse in that area of the country. So I would say, just to be on the safe side, you want to be on that gap, because you never know when hostilities are going to break out.
Okay. Well, we thank you very much, sir.
You bet. Thanks for the call.
Bye.
Thanks for everybody that listens each day here at TFNN to the Power Trading Hour. As always, sell when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time. Hang on, Tom O'Brien.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.